Hey guys, Quentin here. I'm the creator of Zone Search, and in today's video I want to walk you through something that I personally find very important, but that a lot of people do not really look at in the right way. And that is what actually happens when a trading system goes through a slower period. Because if you spend any time in this space like I am, you will notice that most people only show you the best results, the best months and the strongest growth. But in reality, that is only one side of the story. So what I did for this video is very straightforward. I ran a backtest on USDJPY using Zone Search, starting from the beginning of 2025 up until today. So you get a clear view of both a strong period and a slower period in one continuous test. Now 2025 was a very strong year for this strategy. The market conditions were clean, movements were structured, and overall the performance was really solid. But then as we moved into 2026, things started to slow down, and not in a dramatic way, and definitely not in a way where the system breaks or behaves very differently, but simply in a way where the performance becomes more quiet and just less aggressive. And this is exactly the part that I want you to focus on, because this is usually the moment where people start to doubt their strategy. They see a few weeks or maybe a couple of months where results are not as strong, and they immediately think that something is wrong or that the system has stopped working, and that is very human. But when you actually zoom out and look at a full period, which in this case is roughly 1 year and a few months, you start to see a completely different picture. So yes, the slower period in 2026 does have an effect on the equity curve, but it does not destroy the overall performance, and it does not change the structure of the strategy. The system continues to operate the same way, it follows the same logic, and it behaves exactly as it was designed to behave. And that is something I always try to explain as clearly as possible. The markets move in cycles, and no strategy performs at the same speed all the time. There will always be periods where things go very well, and there will always be periods where things just slow down. And that is not a flaw, that is simply how the market works. Now, to put this even more into perspective, if you compare what you are seeing here to the long-term backtest of Zone Search, which covers more than 13 years of data, you will notice that these types of slower periods have always been part of the system. They are not new, and they are not unexpected, and they are not something that suddenly appears out of nowhere. They are simply part of the overall cycle that over time builds a long-term result. And that is why focusing only on short-term performance can be very misleading. Because if you only look at a few weeks or a few months, you do not see the full picture. But when you zoom out and look at the bigger time frame, you can clearly see that the system remains consistent, and even when the pace changes. So the main takeaway from this video is very simple. A slower period does not mean a strategy is failing. It simply means the market conditions are different. And as long as the system continues to behave consistently, that is exactly what you want to see. So that is it for this video. If you have any questions, feel free to drop them below, and I will see you in the next one.